Today, Bitcoin 2023 kicks off in Miami Beach. We give you an inside look at the conference from the ground. And eToro's US CEO, Lule Demmissie, sits down with us here at the conference to discuss the latest on the company's partnership with Twitter and Elon Musk. Welcome to CNBC's Crypto World. I'm Mackenzie Segalos here at Bitcoin 2023 in Miami Beach. Crypto prices in the green today, with Bitcoin trading back above the $27,000 level, a far cry from its all-time high of more than $68,000 reached in November 2021. Ether traded back above $1,800 today, and Binance's BNB token jumped by nearly 1%, all as of noon Eastern. Now, BNB's move higher comes even as the Australian arm of the world's largest crypto exchange announced yesterday that some customers there will be unable to deposit or withdraw money after a third-party service provider cut off its services. Now, in a tweet, Binance said that the exchange is trying to find another provider to continue to offer Australian dollar deposits and withdrawals, adding that customers can still transact using credit or debit cards. We reached out to that third-party service provider to find out why it cut off service, but didn't hear back right away. All right, let's get right to our main story. Attendance here at one of the largest Bitcoin conferences in the world is down by more than half amid this so-called crypto winter. Last year, 35,000 people were at this conference. This year, however, organizers tell us that they expect more than 12,000 people. Despite the drop in numbers, this conference features some big names in the industry, including MicroStrategy co-founder Michael Saylor, author Michael Lewis, who wrote The Big Short and is working on another book about Sam Bankman-Fried. He's also scheduled to speak. eToro's US CEO Lule Demmissie is here as well, and I sat down with her to discuss Bitcoin's outlook, sentiment here at the conference, and regulation. So last month, eToro partnered with Twitter to offer a couple of different functions, one of which involved letting users on the platform trade cryptocurrencies. How's that partnership going so far?
Yeah, so to be clear, what we did is a partnership of information and knowledge between Twitter and us. So ultimately, whether you look up a digital asset or a security, you get a little bit of a taste of that and then a throughway into the eToro platform to do more research or trade. Or open an account or whatever else. And so we felt that it was a really important transition point, and it's paid off in terms of the user journey is logical, right? You go from research to practice to trade. And so it's been very helpful for us at eToro, and we've seen lift from a business perspective, and more importantly also, lift from an awareness of our brand perspective.
And what's the goal here? Like in 12 months from now, how does that partnership evolve, or is it really about just fostering more adoption within the Twitter ecosystem of the tools you've already unveiled?
So you have to remember that eToro is a social trading platform, right? So it makes sense that you would go and do a like-to-like sort of partnership where they're more into social, and also Twitter has already said that financial news is going to be a massive opportunity and sort of focus for them. And so for us, it's more about like partnering in a way that is symbiotic to each business. And so I think that it has longevity and relevance over that longevity in terms of as Twitter leans in more into financial service news, us being there to catch the benefits of people who want to do more than just read about financial services.
So Twitter CEO Elon Musk told a Morgan Stanley conference that he sees Twitter becoming the biggest financial institution on the planet. Does that mean that they ultimately become a rival? Is that good for business, the fact that you're already partnered up? What does that look like?
I think that, the very nature of innovation is frenemies, right? Innovation doesn't exist without different technology providers partnering in ways that I think they stick to their knitting, but they also have concentric circle spaces. And we don't see a threat in this. We think that the broader the conversation about investing for an individual, the better for eToro and for communities at large.
So in the last year, we've seen this erosion of confidence in centralized crypto entities with the fall of FTX and other centralized players like a Celsius or Voyager Digital. A lot of consumers misunderstanding that they were actually unsecured creditors and not depositors with protected holdings. Has that affected at all the way that you've seen your consumer base respond, specifically those that are using the platform to trade crypto, or what does that look like, that relationship?
Yeah, I mean, this kind of environment cannot be helpful to sort of fostering confidence in individuals, right? But one of the things that's really interesting about the digital asset investor is that there's an element of like already understanding that the system is still maturing, right? So we didn't necessarily, so in some cases we saw people get nervous, right, and moving to their wallet. But in many cases we also saw, as you see in the surge of Bitcoin this year, people participating in thinking, okay, maybe this is a low that I can also take part in. So you saw three things. One, people taking their money off, their coin off into their own wallets, some people buying more, and then some people just still in that buy and hold sort of model that we're seeing is really persisting in digital assets. So it never is helpful to have bad news headlines, but ultimately I think that this industry has a resilience that I think is very notable.
You know, you've got some companies like Coinbase saying that they are exploring being based outside of the US if they can't get greater clarity from regulators. Is that something that your business is thinking about, whether you need to have a plan B if things don't go well in terms of the evolution of regulation here in the US?
Yeah. So first of all, eToro is already a global company, so that we have that level of diversification that actually gives us more endurance in terms of understanding how to function in each regulatory environment. We're regulated in over 11 different jurisdictions, 100 countries. So we navigate this already. And in the US, we have a ton of licenses, 46 licenses. We just won our New York license. We're securities, we also have our securities license and do stocks and ETFs and options. So we're used to regulatory sort of frameworks, if you will, and the complexities that come with them. I will say, having said that, it would be helpful to have more clarity. You know, I do think that regulators and providers can work collaboratively to find the next iteration of what works. And there's some really interesting regulators out there. Like New York is a really interesting regulator of crypto, of digital assets. So I think there are blueprints out there that can easily be sort of looked at as mechanisms to see how can we take this digital asset industry to the next level in a productive way, in a way that actually takes the best use cases and really make sure that we don't lose the innovation that comes from that.
You know, a lot of people would say, I mean, speaking of New York regulators, that NYDFS has, you know, played a major role in this idea of an Operation Choke Point 2.0, kind of closing off those rails connecting fiat currencies to crypto. How do you feel about the rules coming out of New York with respect to the crypto industry?
Yeah, I don't think that's just a New York thing. I think that is a broader national sort of sentiment that you're seeing. You know, at the end of the day, that's precisely why digital assets are necessary, to innovate, so we're not all just reliant on one rail. It's a good thing to have diversification of our capital markets bloodstream. And I'm hopeful that this is a moment in time where obviously regulation is doing what it's doing right now, but ultimately that our imaginations around what could be take over in the next few years.
So crypto is just a part, like one part of what eToro does.
It's one part.
So why are you here? What brings you to Bitcoin Miami during the height of it? Well, not the height, but during a bear market.
Yeah. So partly because, you know, for us as an investing platform of retail investors, we need to be close to retail investors, right? And so this is a phenomenal conference that really embodies sort of the spirit of that, right? So that's one. And then the second is really just ultimately, like for us, we want to make sure people know that we have a mic and we're talking and advocating and championing for this particular space, right? I don't believe in crouching when times are hard or chilly, if you will. Actually, that's a very time that our investors and our customers need us to speak with confidence. So that's one of the reasons I'm here.
Last question for you. In terms of the work that you're doing at eToro, specifically within the digital asset sector, what keeps you up at night? What are you worried about?
Oh, you know, remember, we have an options business, which is growing and thriving. We have a stocks business, which, as you know, the regulators that govern the markets are not necessarily any less stringent. And then we have the digital assets. So, I mean, there's a lot that could keep me up at night because we've chosen to have a multi-asset platform. I would say to you that this is, you know, as I tell everybody, if you can't take the heat, don't come into the kitchen. So I can sleep well at night.
Okay, that's all for Crypto World today, but we'll have lots more coverage here in Miami Beach for Bitcoin 2023 in tomorrow's show, including a conversation with Michael Saylor. So we'll see you then.